Hello traders, Gary Wagner here, just after 11:30 in Honolulu, 5:30 in New York. It is Thursday, 26th day of September 2019, and this is the daily report for gold and silver. We are seeing a market in consolidation in terms of gold pricing and silver pricing after yesterday's sharp decline. There are so many fundamental events that could flare up right now. It is easy to see why that key level of $1,500 per ounce in gold is holding. My sense is that analysts as well as market participants believe that there are a number of factors that could mitigate an end to the correction that we have been witnessing over the last week or so. Nonetheless, we are currently flat with no active trades. We'll talk about our next move as we look at technical studies, but we did pull profits yesterday on our former long gold. Let's take a look at current pricing. So it is just after 12 noon now. The afternoon break, as I call it in Hawaii, is over, and trading has resumed overseas. Currently, we do have some more downside pressure in gold, down about $3.80 at $15.1140. This morning, we had a low of $15.07, so it still seems as though there is the potential for solid support in gold around $1,500. On today's show, we're going to look at a couple of different possibilities in terms of our current model for this correction that is now underway. Silver did sell off sharply, breaking below $18 per ounce again. This again is the afternoon session, $17.89, down about 2 cents on the day. Let's take a look at our technical studies. We are currently looking at a daily chart, and the key to this chart is the simple moving average. Time-wise, it is a 50-day moving average. It is used by the majority of traders and analysts to determine on a short-term level if a market is still in a bullish demeanor or a bearish demeanor by virtue of it being above or below this key moving average. As we can see, that comes in right now at $14.99. And as I've been saying, $1,500 is such a key and critical level. We'll have to see if that holds, but we are currently flat. My recommendation is to maintain our neutral stance to see where this market wants to go. We have to acknowledge that at any moment, of course, we could see something flare up and gold take off and take off strongly to the upside. So if you recall from discussions over the last couple of weeks, we talked about the models that we can use for this current correction. And one of the most common models is what's called a simple ABC correction. And that's the basic model we have been looking at here. My belief and assumption has been that the first leg down, in other words, after hitting approximately 1560, market moves lower. This would be our A. We had our B wave, which came right within our predetermined model parameters at around 1540. We were looking for 1539 to maybe 49. We pulled profits yesterday when this market came down. It came down with a fire. That is this candle here. And that says that we are probably, if this model is going to work out this way, is on our final C wave down. If it only comes to the level of A, it is simply called a flat. If it trades much lower, it is a more common ABC because typically your C wave is going to be your lowest trading point. The good news is once this correction is concluded, we're looking at a pretty nice rally of about $200. But there are other models, and let me put up one of them to show you what I'm speaking about. And traders, we are looking at a potential, what is simply called a horizontal triangle. And that is a scenario in which you don't get that straight ABC, but rather you get a series of waves as the market forms a pennant or flag formation and begins to consolidate with a tighter and tighter range. We've had our A wave, our B. You would typically get a C, then a D. You can see that you're getting lower highs and higher lows. It turns to conclusion when you hit the E wave, and this wave here is simply called the thrust, and the thrust, of course, is the particular time that the market pricing moves above this level of resistance. Now, in a bull market, you can see a symmetrical top declining, bottom rising, a descending, an ascending, or a reverse symmetrical. And I've put an illustration of that up on the screen. All of these are potential ways we can see this current correction kind of unfold. But for right now, we're going to remain neutral and watch to see how this correction develops and where it concludes. At that point, we will have a dynamic trade that I really believe will be the star trade of the year, because we're going to see a $200 rally, I believe, and be ready for it. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.